Welcome back to Rich Dad Stockcast. I'm your host, Del Denny, and today we're going straight at the topic everyone thinks about, talks about, dreams about, but rarely builds a strategy for, and that's escaping the rat race. Now, most people spend their entire lives trading time for money. They climb the ladder, they work harder, they earn more, but the game never ends. Financial freedom doesn't happen by accident. It happens by following a blueprint. And that's exactly why I brought in Rich Dad expert Andy Tanner, someone who's been teaching the real path to financial freedom for years. And before we jump in, make sure you head to stockcastbonus.com and grab your free tools and resources. If you want to start creating cash flow and building freedom, this is where the journey starts. Andy, welcome back to the show.
Del, it's great to be with you.
I'm excited for this. I think, like I said, I think everybody thinks about escaping the rat race. But before we jump in there, talk to me about stockcastbonus.com. There's some great stuff and resources that helps them, but share us a little bit more. What's in there?
Yeah, those who are familiar with the show know that it's all about action. People, it's wonderful to live in a world where we have content to consume. And I never thought, my main goal in life is not to be a content creator. I spend a couple hours a week podcasting, and that's about it. I spend the rest of my time doing stuff, and I'm not much of a scroller. There's so much content, less action, I think. And so stockcastbonus.com is a place where people can go to start getting information that's organized in a way to promote action that is long-term, that is consistent, rather than 15 seconds of advice at a time that gets people a dopamine hit. I think that's the thing I worry about content, is it can give the illusion of improvement just by imagining getting better, where actually getting better means you're doing some things. So, head to stockcastbonus.com. There's free stuff there, and it's great content because it's guided towards steps and action and doing things. When a person actually buys an asset, then the cash flow is no longer theoretical. It's real, it's spendable, it's reinvestable, it's compoundable. And that's when people's lives start to change. So that's a great first step. If you find yourself watching a lot of stuff and want to get some instructions to do a lot of stuff, that's a great place to land.
There we go. Great first step into getting out of the rat race. Now, speaking of the rat race, that's the goal. Let's get out of the rat race, but let's begin. What is the rat race really like? Why do so many intelligent, hardworking people stay stuck in this race their entire lives?
Well, it's not just that they stay there; it's that they got there. It's sort of difficult. Often feels like a one-way door, doesn't it? When we go to school, which is hopefully a system that'll change soon, but school hasn't really changed that much since we started having it. A group of kids get together, and there's someone at the front of the room, and whether it's a chalkboard or a PowerPoint, we say, "Hey, learn this stuff." And that's changing with AI. I feel bad that everyone that will graduate, this next spring, everything they learned in that 4 years or 10 years or, whatever it was, is in my pocket now. I can't believe that I'm programming things and using Python when I have no idea what it's doing. I just tell it what to do and it's doing it. So getting into the rat race is a tough thing. And I think it happens because that's where school guides us. It's not, do you want to run this race? It's you're going to run this race and pick how you're going to do it. Pick what you want to be when you grow up, so to speak. And so, once you get in it, it kind of gets in your routine, and people don't really know how to buy things. And really, it's your purchasing habits. I think that's the simplicity of Rich Dad Poor Dad. It's like, are you going to buy things that put money in your pocket? Or are you going to buy things that take money out of your pocket? Which of those things you're going to learn about? And most people don't know how to buy things that put money in their pocket. Del, I'm so grateful for the assets that we've accumulated over the years. We've made so many mistakes. We've had things that we bought and we had to learn lessons from. But it's just amazing. I'm so thankful for Robert. I had a meeting with my accountant, and I should call him a tax advisor because he's far more an accountant, Tom Wilwright. We were talking about the precious metals that we own because we were, learn so much from Robert. And even though they don't cash flow, I'm looking at gold right now, and I'm just blown away that that's a significant amount of wealth right there. That I'm just so grateful that I decided to buy things that were assets instead of everything in my life a liability. So I think that's what keeps people in, is they don't know how to buy assets.
That's true. And to add to that, my question is, why does increasing your income not equal freedom? So many people, they get a job promotion, but they
Yeah.
think they're going to escape the rat race, but they don't. So why do high earners still get trapped?
Well, there's really three types of people. If you bring up one, we'll bring up the other two. There's three types of people that come to the Cashflow Academy. Some people have a money problem. Maybe they've gotten their credit card a little bit, they've been a little bit frivolent with that maybe, and they've got a big debt. Or maybe they, were young and they thought, well, these student loans are easy to get. And next thing you know, they got a 6-figure student loan that's hanging around their neck. Or maybe they just have a purchase coming up. So some people need, just bulk cash, and they have a money problem. But the people you're talking about have really a freedom problem. And usually we raise our standard of living equal to our income. We don't often have a surplus. People just kind of say, well, I can afford this. And so they maximize their life, which is really, great, because you can live a better standard of living if you have more income. Problem is if they get a certain level of commitment, a certain level of bills built up, it doesn't matter, obviously, if you make a lot or little, if you have to pay your bills with what you make, it's tough to invest. And those are the people that say, look, I have a good income now. I just don't like my lifestyle very much. I don't like, when I get up in the morning, having to go do someone else's bidding and work on someone else's company and someone else's dream and someone else's problems and someone else's deal. I think, wait, gee, I kind of like to do my own deal. And so I think that's the person we're talking about. Is there's a lot of people who become the doctor, lawyer, whatever, and love it. There's other people that become it because they thought it made a lot of money and they don't like it as much. They'd like to leave it, or maybe they did it for a while and they'd like to retire and say, hey, I want to move on to a different part of life, but they don't. And then I guess since we're talking about it, the third type of person, and I think about this constantly, is legacy. The ability to leave something to charities, to leave something beyond the grave for family, to really impact grandchildren, which I don't have yet, but someday maybe. Things like that. So those three things, bring people to want to know how to buy assets, because it's assets that give you a solution to all three of those types of problems.
So thinking about financial security and escaping the rat race, I think we've been sold a lot of lies through the years of how to achieve financial security. Um, what should the general public, what should most people know about the biggest lie, in your opinion, uh, from keeping them from financial security? Is it 401ks? Is it mutual funds? Is it work hard, go to school? In your mind, what's the biggest lie people believe about financial security?
Well, I've never thought about ranking them, because there's a lot of them that we could talk about. There's a lot of, we supposedly moved into the information age, and part of me think it's the misinformation age. Tons of things that lead us down the wrong road. It reminds me, this isn't in the bullseye at all, but it reminds me of when we went to school. They had this food pyramid where the bottom of it was all carbs. Eat your wheat and your bread and your processed flour, and it was all carbs. And they've changed that. They found out, oh, that's actually, I don't know what farmer greased someone's palm to build that pyramid, or maybe they're just honestly wrong. I don't know. But you mentioned a lot of them. If we strung them together, Robert often says this, work hard, go to school, put your money in 401k. It might just be that template that is the biggest problem. I in my book 401 Chaos, I write about fish, and I don't know if this made it into the chapter or not, but I when I was writing the book, I wrote about schools of fish, not just schools of people. And fish are born in a hatchery. It's a protective prison. Is to protect them as they grow and keep them from having anything eat them and harm them. And when they're old enough, they're released out into what they feel like is the wild, where they really were born from day one and processed to the angler's agenda. And they didn't know that when they get released into those rivers and streams, that bait is food. It's real food. It just conceals a hook. And I think about the employer match. It's real money, and you think about a fish, how difficult with all those years of evolution, how difficult. If I put a little bit of a night crawler on my hook and I throw it out there, it's real food. It's a real night crawler. And for a fish to see that night crawler and not bite it and not take it is nearly impossible. And think about how hard it would be for people to say no to an employer match because they feel like it's a free meal. And they have no idea that it's concealing a hook because it's concealed, it's hidden. And so those types of things are, they don't know how to read a financial statement on Wall Street side. They don't know how much money Wall Street makes when they make those commitments. And I think they'd be surprised that they do come up on the short end of the stick there. So, yeah, there's a lot of lies, and maybe it's just that one. Go to school, get a job, put your money in 401k, and live happily ever after. Well, the 401ks don't do that, and the jobs aren't always the best template for freedom. And maybe it's a life some people want, teach their own, but a lot of people don't realize there's an opportunity to be free, opportunity to do things yourself. So teach their own.
To each their own. And I think another aspect is we're hammered on go to school, work hard, build up your net worth, right? But rarely do we talk about cash flow. So why is cash flow really the key to breaking out of the rat race, not just focusing on net worth?
Yeah, I mean, money is, we have this thing called currency, and current of an electrical current, current of a river, a current, ocean currents, they denote movement. They denote flow. Water flows, electricity flows, it moves. And all a financial statement does is show that pathway. I think Robert Kiyosaki's brilliance, and I've adopted this as a teacher full bore, is I taught my kids with arrows instead of numbers. And when you put arrows in a financial statement, then you can track how the cash flows. And so cash flow is the lifeblood. And the reason that cash flow is a big deal is if you look at a financial statement, there's three parts to it. There's the balance sheet, what you own and what you owe. There's the income expense, what you receive and what you spend. There's a statement of cash flows, which just shows sources, whether you had money leave your account or come to your account from operations, work, or whether it came from assets or it came from borrowing money. And that's it. So if you look at 2/3 of that, you just take the income statement, the balance sheet, you got 4 boxes now: income, expenses, assets, and liabilities. So the expense box is always flowing out. It never flows backwards. It always flows out. And that's the problem to solve in life, right? It's food, clothing, shelter, medicine, luxuries, doodads, whatever it is your requirements for living are. And because that money flows out, there needs to be something flowing in. And so the question was, why is cash flow the lifeblood? There's really 4 ways you could answer that box. You could do it with borrowing money like the government does. You could, take a resource and borrow money to pay bills. The problem with that cash flow pattern is it's limited to your credit limit. You're not like the government that could just print or raise their own credit limit. There'll be a point where creditors say, that's enough. We're not going to let you borrow anymore. So solving the expense box with the liability box and seeing that flow, that cash flow from a bank to you to an expense, that flow of money is limited because the bank will only loan you so much. The next box is a 401k, which is you pile up a bunch of old money instead of borrowed money. Again, we have an hourglass effect. If you read the Vanguard report, it's around $90,000 is the median balance for people 55 to 64, staring at retirement. And that doesn't last you a year anymore, right? $90,000 is just an hourglass. So you could take that 90,000 and flow it through the expense column. And again, it's an hourglass. It's also more susceptible to market risk. As it goes up and down, that hourglass expands and contracts. The third way would be cash flow from the income column. That's the best way. And it's got two subcategories. You could either get that income from working, or you get that income from income producing assets, which adds another element of cash flow from an asset rather than capital gain. Right now, the gold that I have, I have a spreadsheet that my wife and I look at every week, and it's got the number of ounces of gold that I own on it. And every week I just put in the price and see what the new net worth number is. And it's astounding. It's doubled in the last, few years. It's gone from, $2,000 gold. I think it's $4,300 as of this recording. Incredible, right? Incredible for a gold eagle. That's still an hourglass. It doesn't produce cash. And if I look at our rental properties and our stocks, they do produce cash flow. The stocks produce dividends. The real estate produces distributions. It's the same thing. It's just cash. It's fungible. And that's a great way to answer expenses, is if you have income. So you can either have income from an asset or income from a job. And that's really the best. I think income from assets is the ideal. So if you could really figure out a way to short the dollar, which would be to borrow it, flow it into the liability column, trade it for an asset, have the asset produce income that doesn't expense, and you touch all four boxes, and you can figure out that flow. Now you're Kenny McElroy, your Stan Merrill, your Kim Kiyosaki, your Robert Kiyosaki. That's really how they've done it, is they borrowed their way there. And to do that takes some skill, because the cash flow's got to be bigger than the payments by a margin of safety, but they do it. And that's financial intelligence. That's it. So cash flow is the lifeblood. Because that's a long answer, but cash flow is the lifeblood, because that expense column is something we all stare in the face every day. Every month the new bills come, and you got to decide whether you're going to go to the refrigerator with fresh new food, or if you're going to go to the pantry for a little bit of canned food, or if you're going to go to a neighbor for some borrowed food, borrow a cup of sugar. It's the neighbor, the pantry, or the fridge. How is that food going to be obtained and consumed?
That's a good way of looking at it. Well, let's do this. This is getting exciting, but let's take a quick break. Listener, if you've ever felt stuck, frustrated, or felt like you're doing everything right but never getting ahead, you're not alone. Most people are never taught how to exit the rat race like we've been talking about. But the second half of this episode is where things change. Andy's going to lay out the blueprint, the actual steps someone can take to move forward to financial freedom. But before we continue, head over to stockcastbonus.com. Grab your free tools. If you're done spinning your wheels and ready for a real plan, that's where you start. So stick around. We'll be right back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning, as well as it's really solidifying in my mind. And they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad Stockcast. Now let's get practical. Andy, walk us through the blueprint. How does someone actually exit the rat race? And let's start off with step one, building financial intelligence. What foundational knowledge does every future financially free person need?
Well, when you talk about that first step of financial knowledge, you're really talking about personal development. And there's a lot to that. I think that there is a component of kind of an academic how-to that people worry about. What do I do? What's the recipe? they feel like it should be like school, and there's an element to that. I've got my cash flow is greater than net worth, meaning more important, the shirt on. So, that's the thing to learn, that the cash flow is more important than the net worth. It just is. And so when people say, oh, he's a high net worth individual, that doesn't mean that he's solvent, right? Or she. So there's that academic part of it. There's also a very important part of personal development that people don't understand because they went to school is working on your spirit and working on your temperament and working on attributes, toughness, resilience. Certainly, I was watching Jonathan Haidt the other day. He was talking about anti-fragile. Investors cannot be emotionally fragile. So when you talk about intelligence, there's you talk about financial intelligence. I think the best book written on financial intelligence might be The Intelligent Investor by Benjamin Graham. And when you think about that book, I read it once a year. I don't often do encore reading, but I read that one about once a year as a reminder. My father used to have us read the Bible every day. I can read The Intelligent Investor at least once a year. And you think that it's going to be a book about numbers, and there's a little bit in that. There's a couple of examples like that. But chapter 8 and chapter 20, in particular, talk about temperament and emotional intelligence, right? And intelligence, you think, well, intel is gathering information, but also how you react to that information is important. So investing intelligence and financial intelligence, it is an amalgamation, a combination, I guess, of how to practical, how do you do a fundamental analysis? How do you look at a company and check the boxes and say this is a strong asset? That's financial intelligence. But also when the market drops and the emotions are high and everyone sees a market in meltdown, I see a sale. That's a different kind of intelligence, right? It's pretty easy to look around during COVID and say, my gosh, this is the best sale we've had in years, and be excited about low prices. So, I'm rooting for the crash all the time because why wouldn't I want things to go on sale? So there's when you say what is financial intelligence, it is a personal development issue of not just how to practical knowledge, but also I think that the thing that Robert had that I had to develop, and I still work to develop it, is Robert is a military guy, had a lot of discipline. And I don't think undisciplined people do well as investors. So that type of personal development is a wonderful. People always come to me because they think it's about the money, but they don't realize it'll change who you are as a human being. And that journey is as exciting as an increase in the balance sheet or the cash flow pattern.
Very
so
true.
That's financial intelligence. Yeah, you say you're going to go rapid fire. You can't rapid fire with me. I'm too long-winded.
I love it. All right, well, here we go. Step 2. All right, so step 1, financial education. For me, I the very first financial book I've read was Rich Dad Poor Dad in my early 20s. Super excited, ready to go. And that naturally that led to step 2, shift from earned income to cash flow investing assets. So as we think about, we get excited, we get our financial education. Naturally, we want to buy some assets. So where do we start? Do we do stocks, options, real estate? Where does someone start? The listener that's beginning, where does someone start?
Well, they start where you did. Read Rich Dad Poor Dad. That outlines it pretty well. We talk often about asset classes. I don't like the debate about asset classes because they all produce the same thing that's fungible. They produce cash. And, some people want to make it about the asset instead of about the investor. And I think that's a mistake. The stock market didn't make Warren Buffett rich. Warren Buffett made Warren Buffett rich because the stock market's made a lot of people poor. And I could go through T. Boone Pickens did very well with energy, with natural gas and oil. The T. Boone's family, I'm sure, is very happy with what he did. I know people lost their shirt in oil and natural gas. So it's not the asset, it's the investor. And as soon as you start to have a debate over which asset class is better, you've now removed the investor from the equation. Why don't we say which investor's better? Or which person was the better decision maker and was more intelligent. So I think when a person makes that transition, go make some mistakes, buy some stuff. Investing is a lot like life. There's I have good days and I have bad days. Had an awesome day yesterday. Day before was terrible, right? It's just you have good and bad. You have good weather, bad weather. And some of the assets get used to it. Some of the assets, sudden change, something weird happens, and you lose a little money. And so you learn and that. But if you have more good than bad, you're going to be okay. So go buy something. Go buy a duplex and see how it goes. Go buy some stock. I wouldn't go buy a $10 million multifamily complex, or a fourplex or something. I'd start small, get a duplex or single family, and go buy one. You bought one to live in, go buy another one, or buy some gold, or buy some stock and see. Paper trade, play the cash flow game, read books. Books are really good for people who are interested in success. Coaches and mentors are really good for people who are committed to success. So if you're interested, go read a book. And then when you get committed, go get yourself a mentor and off you go. That's all Rich Dad Poor Dad is a book about a mentor, about a guy who found a mentor.
That's spot on. I never really thought about it that way, but absolutely. Now,
that's all it is.
It really is. Now that you kind of look at it from that angle. All right, so let's go to step 3 and talk about systems. How important systems are. So I get it. Step 1, we get educated. I felt that. Step 2, go buy some assets. I did that in my 20s. I started buying stocks, and I thought, okay, I did buy the duplex. That was actually my first real estate investment I ever made was a duplex. Step 3, systemize your investing. Why is having a repeatable, disciplined system more important than just chasing these big wins?
In the book Rich Dad Guide to Investing, that's a thick book. There was a lot to that. I think it was Robert's 3rd or 4th book after Cashflow Quadrant and Rich Dad Poor Dad. And in it has the BI triangle, and dead in the middle of that BI triangle is systems. The systems are great because you can get standard operating procedures. You can automate them. You can teach recipes to other people and leverage other people's everything, other people's effort, energy, education, enthusiasm, experience. You do the OPEs. And, I have a system that I've settled into, which probably 90%, maybe 85% of the investing I do is very repeatable, and I do things on a monthly basis. Usually I'm not a day trader. I never would want to do that. I'm not good at it. But other people do become day traders. There was a guy named Jack Schwager who I've interviewed on my podcast twice. And he wrote a book called Market Wizards, and then a second edition of Market Wizards. And he interviewed all these, most successful guys out there. It's just really, really good stock. They're all stock guys. And not one of them had the same system. So it's not like there's a secret sauce that, is just a template you find. Every case is different. When my wife was diagnosed with breast cancer, they did something called a mammoprint, which really is a fingerprint of her particular type of cells, because she's unique as a human being, and therefore her cells are unique. And what they do with these mammoprints is they try to design as custom as possible a system of treatment based on that mammoprint and how it compares to other mammoprints, to try to get an idea of what would be her best treatment, as opposed to just a blanket everything. So Jack Schwager interviewed these guys, and he said the one thing they all had in common is they had a system. Now, all the systems were different to fit their own personalities and skills. And so you take some generalized principles that are true in all cases, but recipes are not generalized principles. Hopefully they're built from generalized principles. And Jack Schwager really does a good job of showing how those general principles are woven into individual systems. Everyone on my team does a little different. Corey Halliday, fantastic. I mean, I watch him and I'm just like, man, this dude is unbelievably good. Best risk manager I've ever seen. Noah trades more technically. He's more active. I'm a stock buyer. I don't sell a lot of stocks. I don't want to give up ownership, but I sell a lot of options because they expire. And so I buy stock and I tend to sell options. So that's really a 1-2 punch that I'm comfortable with. I don't like to buy low and sell high. Once I have something in my asset column, I'm going to leave it there and let it pay me a dividend and sell options on it for extra income. That's a easy system. It's simple to do. It's one of the things that we teach at the Cashflow Academy among many different options, no pun intended. But yeah, that's it.
All right. So then step 4, you kind of mentioned this, manage risk like a professional. We have a system in place. Mm-hmm. As long as we have a system, I think about it this way. You hear so many gurus talk about having a morning routine, right? But every morning routine is different. But as long as you have that morning routine, you're good. So having a system is great.
A system, yeah.
Step 4, managing risk like a professional. So how does someone manage, how does risk management accelerate and not slow your path to freedom?
So you really gave a great term there, manage risk like a professional. So that, in my mind, creates a delineation from managing risk as an amateur. So what is the difference? Well, Robert wrote a book called The Unfair Advantage. And he was very kind and asked the advisors, asked me to put a little into it, not much, a few paragraphs. But he kind of interviewed and it said, say, ask Andy, and then it'd be a section where I'd ramble, about whatever. But one of the questions he asked me was exactly that one. What is the difference between an amateur and a professional? And I said it boils down to 2 things. It's how they look at cash flow and how they look at risk. An amateur seeks capital gain and manages risk through diversification. That's a 401k. That's absolutely an amateur. They're not professionals. They have a job. They're not professional investors. I never even call them investors. I call them participants because they're really not investing. They're participating in a program. The Wall Street's doing the investing, and of course, since Wall Street's doing the investing, they're the ones making the money. They're the ones doing it right. So from cash flow, amateurs look for capital gain, and right here, cash flow. Investors invest for cash flow. Warren Buffett, I think it was probably his 2021 letter or maybe his 2020 letter. Those become precious because he's not doing them anymore. He said that operational earnings is the most important metric on a GAAP total. Absolutely most important on a general accounting principles total. It's operational earnings. It's a cash flow issue. It's not the net worth increase on the balance sheet, which is also part of the GAAP total. And so right here, this literally what he said is that the operational earnings are more important than the total value of the portfolio. Even in years where that number isn't larger than this one or a big increase. When it comes to risk, 401k people spread their money around, diversify. That really is a confession that they don't know how to analyze a business. Well, Buffett says it this way. Munger says it this way. Why, if you had 30 stocks, 30 companies in your list of attractiveness, why would you put the same amount in number 30 as number 1? Why wouldn't you put more in number 1? He says it strikes them as madness is the word they use. Madness to diversify. And it is a confession in their view that a person doesn't know what they're doing. There's 1,000 quotes from those guys. Diversification is an answer for ignorance. But for those that don't know what they're doing, the amateur, that's what they'll do. So your question was, how does a professional do it? We have several ways we do it. We do it with position sizing, which is different than diversification. I think position size is at the top of the list. And then I think in Robert's book, I said, we manage risk with contracts. So think of it this way. I buy a car. Did I buy the wrong car? Did I make a mistake buying the car? My son was in a horrific accident, walked away. Unbelievable. A lady stole a car, ran for the police, helicopters. We counted 28 emergency vehicles chasing this gal. She sees a stop sign, pulls into the other lane to get around the people that had stopped. And my son's going the other way at 15. They clocked him at 15. He was going. She was going 63. That's a 78 mile an hour collision. Just horrific. And, somehow, he walks away and she loses her life. So we had insurance. She didn't, but we did. We had insurance. Did my son make a mistake driving the car? Was that a bad choice? Was it stupid? Was it ignorant? No. Things happen. Sudden change, right? A sudden change. Things happen. So we had insurance. And that's how investors look at it. I don't look at, if I have an investment that loses money, I don't look at it as a mistake. Well, I was wrong. I didn't predict it right. Well, hell, I can't predict the future. I don't know what's going to happen tomorrow. I'm in the preparation business, not the prediction business. And so you don't buy insurance predicting that you're going to get in a wreck this week, or you wouldn't buy it on the weeks you didn't think you were going to get in a wreck. You buy insurance to prepare for unexpected change, an unexpected event, something that you didn't see or expect to happen. So you expect the unexpected. And that's risk management, is to expect the unexpected. Gamblers don't do that. Gamblers put their money on red or black at the roulette wheel and spin it, and they're either right or wrong in their prediction. That's gambling. Gambling is A-B, and you pick one. Social Security solvent, Social Security is insolvent. I'm going to bet that it's solvent. Okay, let's see what happens. And there's no plan B. So when you manage risk like a professional, it's your plan B. It's your position size. It's your plan B. It's how to hedge. Shakespeare is the first person that used that to hedge, to lurch, to defend or attack. And a hedge is a hawthorn bush. It protects the castle. It's like a moat. It's the same thing Buffett says. So that's professional risk management, is hedges, contracts, insurance, plan B, not just hoping things work out, expecting the unexpected.
There we go. Beautiful. What a great blueprint there, from education to buying assets to systems to managing risk professionally. Last question for you, and this is just kind of a rapid fire question because we're getting towards the end of time here. What's one specific action, and I love the word action, what's one specific action someone can take this week to move closer to financial freedom?
Whatever they want, anything. Just do something. Buy something. That could be an action. Learn something. That could be an action. Find a mentor. That could be an action. Go to stockcastbonus.com is a great action. At stockcastbonus.com, we've got an ebook right now, and it's called The Power Six. And the 6 means income, expenses, net income, asset, liabilities, net worth, those 2 nets there. How do you take those 6 numbers in your life and begin to do those 5 things you talked about? How do you start financial intelligence? How do you start transitioning from spending money on liabilities to assets? How do you do that? And I think maybe one of the best actions you could have is something my wife did. Robert and Kim taught us this with Betty, the bookkeeper. They did a monthly meeting with their bookkeeper to focus on their goals, their finances. I do it every week. I thought, well, if once a month is good, maybe once a week is better. For us, it was. And so once a week is that might be the best action a person could possibly take, because what you focus on expands. But any of those things. But if you don't know how to have that meeting, I show what the agenda is in the Power Six. I show what it looks like. I have the agenda. I show what we go through. There's the system right there, and it's free. So if you want an action that's free, then go read Power Six. And we have calculators that you can start to put your own numbers in. We have online resources in that book. You just click and it wash you through it. And, it's life changing because you're doing things, not just consuming content. You're creating instead of consuming.
There we go. Beautiful. Well, thank you, Andy. And that wraps our show. Listener, the rat race is not a life sentence, but escaping it takes intention, education, and action, just like we talked about. And if you're listening to this, you're already ahead of most people. And a big thank you to Andy Tanner for laying this out for us today. If you're serious about your journey to financial freedom, make sure you go to stockcastbonus.com right now. You'll find those tools and trainings and resources that Andy was talking about to help you to move from just dreaming about freedom to actually building it. If you've received any value from this episode, please like, subscribe, share it with someone that's ready to step off the hamster wheel, so to speak. Listener, you're not here by accident. You're building something that most people won't. So stay smart, stay invested, and we'll see you next time.
This podcast is a presentation of Rich Dad Media Network.